Hey everyone, it's another holiday chat recording. Today I have Troy. Merry Christmas, Happy Holidays, Troy. How are you?
Thank you, David. I'm great. Thank you.
Well, what did you want to talk about today?
Well, I am interested in selling my business next year.
Okay.
And so, I've listened to your podcasts and bought one of your books and things like that. So, I wanted to have a discussion today on some topics on getting ready and getting prepared to sell my business. So, some of the things that I would like to discuss is, one potentially what the price should be.
Okay.
um, Also, ad backs that I need to do. What are the appropriate ad backs? I do have a list of those, and I was able to verify with my accountant that most of these are usable as ad backs. What else? I guess those would be the two top things, and I guess maybe also, potentially looking at potential buyers for the business, and maybe um, what SBA options would be, so that I can research and figure out that type of information to provide the potential buyer. And I did have some interest from one of my employees, so and those are kind of some of the things that I'd like to discuss today.
Sure. So why don't we start with this? What industry are you in? What type of business is it?
Yeah, so I own a franchise sandwich shop. I bought it in 2019. February of 2019. So February 22, it'll be 3 years.
Okay.
Prior to that, I was in software sales, 20 plus years in software sales, and just got tired of the grind with mostly with my commute. I was commuting 3 hours round trip, and spending
Wow.
spending about 3 months out of the year just in the car when you do the calculations of 3 hours a day. And so, um, you know, s- buying my own business was something that I had thought of in the past. I have family members that own their own business. Starting young in the fourth grade with my paper route, and always having to work. So this was something that was very interesting to me. Again, mostly driven off just leaving the grind of the commute.
Okay.
And the things that were important to me when I looked for a business was, the commute time was, it had to be 30 minutes or less. And right now my commute, 30 minutes or less one way. So for me to get to my shop, it's about 15 minutes.
Hmm.
So it made that possible. The second thing was also replacing a software salary
Hmm.
was important to me. So the net income of the business had to be, in the 200K range or so. So those were probably the top two criterias. And I really didn't have an idea of what type of business. I was looking for about a year.
Yeah.
And yeah, and then this came
And
across.
just basically with those criteria, close
Yeah,
to your home,
yeah,
enough of an income,
yes.
and you were open to anything that kind of came up. Would you say that acquiring the sandwich shop was a big improvement in your quality of life?
Oh yeah, without a doubt, without a
Yeah.
doubt. I mean, it was a lot of work at the beginning, the first 6 months or so. But after that, things settled down, and after the first year, and to where now I go into the shop, on the weekdays, but I'm there maybe from like 11 to 1, 11 to 2. I have weekends off, and it's basically managed by team leads and shift leads. I don't have a manager or anything like that, but I don't necessarily need one because
Okay.
most of the employees have been with me um, for a while now. So
So
yeah,
and you're in there a few hours a week, but you're kind of doing some of those leadership roles, like obviously making decisions for the business. But are you doing things like the scheduling and making sure that the
cor-
payroll is executed
correct.
and all that kind of stuff? Yeah.
Correct, David. Yeah. So if I'm there 11 to 1, 11 to 2, I'm usually, cashiering. Sometimes I'll work on things that need to be done in the shop, or I need to go and buy things for the shop. And then, yes, on a weekly basis, I do the schedule. We use a app called When I Work, and so that's, I copy schedules from week to week, and take into consideration people who want days off and so forth. So that's something that
Okay.
I do weekly, and then my payroll I do once every 2 weeks.
Okay.
And I used we have a software for that, Prime Pay, that we use um, to do payroll.
So let me ask you a few questions.
Yeah.
When you bought the business, what was the annual sales that it was doing?
Annual sales were so it was interesting when I bought it. He also, well, no, I don't think the last year he had another business that he was kind of commingling. He was doing some construction work um, for the sandwich shops, but in the last year, from what I recall, it was about 1.2, somewhere around there.
And how did your 2019 end up?
2019. So 2019, if you, because I owned it February, if you
Yeah.
add back I'm assuming in January he did about 100K in business. So it was about the same, maybe a little bit more, but not that much more. Yeah, it was around 1.2.
And then what happened for you in 2020 with the pandemic?
We were very fortunate, David, in 2020, because it's a sandwich shop, right? If people come in, they grab their sandwiches, and they're off. So it has a pretty good following. The sandwich shop, a lot of loyal customers.
Mhm.
So our business increased a little bit in 2020. So sales were 1,215,000 compared to the 1.1.
And what does it look like for this year?
Uh, right now we're at 1,255, and so probably another 100K in December. So we'll probably be at 1,355.
Wow. So you've been growing, which is great
Yes,
news.
yes, exactly, David. And I think that's part of the reason of why I'm looking to sell. I've had the business for 3 years. It's doing well. And then the other thing is just the entrepreneurial itch, if you will. It's a great time to buy businesses right now. I'm sure you know some of the stats out there with the baby boomers retiring, and just excited about doing something bigger after the experience that I have here.
Well, I was just going to ask you if we sold the business, what would you do with the money? And you would want to buy something
Uh,
um, in a different kind of field.
Correct, David. That's correct.
Okay.
Yeah.
So let's talk about the cash flow.
Okay.
So you mentioned Addbacks. What on your for 2021, let's say,
Yeah.
what would your total
Yeah.
benefit to you be for being the owner of this business? We're
Okay.
gonna start there.
Okay. So that's obviously with the net income and add backs, correct?
Yeah. And
Uh,
if you can list off the add backs you're adding back, that'd be great.
you got it. Okay. So um, net income um, end of November of 2021 was 211,000. Um, I don't know. Let's say another 10K for December.
Okay.
So we're at 220, let's say. Um, and then what I'm adding back, my salary add back of 50K,
Mhm.
the payroll tax expense of 25K.
Is that the payroll tax just on you?
Correct.
Okay.
Correct. Yep. Um, I'm also going to add back my wife's salary. Um, uh, Starting in August or September of this year, I started paying her $1,000 a month to help me with bookkeeping, to help me with paying bills and doing things like that. So her salary add back is going to be 5K.
And this is something that a full-time owner could easily just do on their own.
Correct.
Okay.
Correct, David. Okay. So we got the salary add back. Note payment add back. When I bought the business, um, I did a note for 50K over 3 years, and I'll have that paid off by February of 2022.
Yeah. So making payments on a debt, the only add back would be the interest component, not the principal amount, because a debt is on your balance sheet. So it's cash extinguishing a debt to make it disappear. It's not an expense. So we can't add it back when we're calculating the cash flow, only the interest component.
Okay, so question on that, David. So is that just going to increase my net income? Because it's not, so since I'm paying the $1,500 out, $1,500 a month from the business account,
Mm-hmm.
that $1,500 will no longer be required to take out of the business. So that would therefore increase the net income, correct?
No, it increases the
Oh,
cash flow. It
okay.
doesn't increase the accounting profit of the business, because the when you on your P&L you got your net sales, then you subtract your your labor, your inputs, your electric bill, all that, and you get your income.
Yeah.
The fact that you owed the seller money, that's
Hmm.
over on your balance sheet. It's a
Correct.
debt.
Correct.
So every month when you send a payment to him, your cash goes down, but your debt goes down. It's all happening on the balance sheet. It's not on the P&L. And so it basically, part of your profit, part of your net income or SDE,
Hmm.
that's where the cash is coming from for you to make the payment to him.
Right.
But the payment to him is not an expense.
Got it.
It's you paying off money you borrowed. Just
Okay.
just like when you borrow money, that's not income that gets taxed.
Right.
Yeah.
Right.
So
Right.
so that 1,500 a month you're sending him, is it just principal? Is it a 0% note, or is
No.
it their interest in there too?
Yeah, there's interest in it too. It's small. It's 5%.
Okay. So when your tax return is done at the end of the year and all that, your accountant is probably got an amortization table somewhere where they're figuring out how much of those payments were interest and how much was principal.
Right.
So the interest part is we can add back. So
Okay.
it's probably very small if you're talking about 18,000 a year in payments.
Yeah. Yeah. That's just an interesting concept to me. Trying to get my head around that. To me, it's like, well, I'm not going to be paying this $1,500 a month out of the account,
Right.
right? So therefore,
So
you.
here's the thing is,
Yeah.
if you didn't borrow any money
Yeah.
to buy the business,
Yeah.
right? You would have that $18,000 profit, right?
Correct. Correct.
But you borrowed money from the seller to buy the business, so you got
Yes.
to pay him back. That financing activity,
Uh-huh.
that's how you acquired the business. It's got nothing to do with the day-to-day operations.
Got it.
So
Got That's
when we normalize or do these add backs,
right.
what we're trying to do is we're trying to determine what would the cash flow be to a full-time owner operator who bought the business last year and ran everything by the book, right? So
Okay.
they just followed all the rules. So and I say by the book because sometimes you get owners who have like teenagers with company cell phones and things of that nature, which are not real business expenses, right? So
Mhm.
we add that kind of stuff back too. But um, the fact that you borrowed money and now you need to pay it back, that's got nothing to do with how many sandwiches you serve or how your employees operate or anything like that.
Makes sense.
Yeah.
Makes sense. All right. Okay. So I will strike that line.
Okay.
The next ad back was for health insurance.
For you.
Yes,
Okay.
for me and my family.
Okay. How much is that?
18,000.
Okay.
The next line item I have was legal expense. That was 2,000.
For what?
I used it to do a trust.
Oh, okay. Yeah. So this would be under the category of a one-time, one-off thing
Correct.
that wasn't related to the normal function of the business. So yeah, so we'd add that one back too.
Okay, great. Auto expense add back.
Okay. And so you don't do any delivery or anything like that for the business?
I do, but I do it right with my own car. I don't let my employees do it. But auto expenses, um, delivery, but also I have to go to will call to pick up food. Sometimes we usually every Monday, sometimes additional days. What else? I use it to go pick up things that the store might need that I don't get delivered, such as milk, carrots,
Okay.
tape pens, things like that.
And so how do you track the auto expense charge to the store? Do you keep track of miles?
So I do both. So yes, I do both. We take the accountant does the mileage, but then I keep track of the auto expense as far as gas, maintenance, things like that. So this auto expense add back that I have is just for gas and um, maintenance and so forth on the vehicle.
Okay, we got to get into this a little bit deeper.
Okay,
So you're keeping track of all of the expenses that go into your car,
correct.
and then you're also keeping track of how many miles you drive for work,
Correct.
right? And
Yes.
then the accountant every year is probably doing a pro rata. Like if 10% of your miles on the car were for the business, they're allocating 10% of those expenses to the business.
I
Or is
I'm
the
not,
business paying all of your fuel and repairs?
they are the businesses
Okay.
paying. Yeah. Yeah.
So this is why it's important because um, when you're doing these calculations, people will sometimes add back all kinds of different things. But what the litmus test is when you get into due diligence and you have a buyer examining what you're doing.
Right.
And so if a buyer sees that you were driving around in your car all year and you put all the expenses in the business, then they know that not all of that auto expense is related to the business, right?
Okay. Yep.
So the question is how much are you saying the business really needs to spend? Because what you described to me is the in fact the business does have some kind of transportation need,
Yeah.
right?
Yeah.
So there's certain things that you have to go around and do. So there's a couple of ways you can do this.
Okay.
Number one is you could add back all of the auto expense, but then create a new expense based on the actual mileage that the business used your car. So if you've ever worked in a place where they paid you mileage for using your personal car,
Yeah.
like
Yeah.
around here, it's 50 cents a
Yeah.
kilometer,
Yeah.
so I don't know, like 80 cents a mile or something like
Right.
that.
Right.
And you just have to be transparent about it. So if you say, I'm adding back all my auto expenses, but I'm now going to add an expense for the 300 miles my car was used for business use, times this amount per mile,
Hmm.
then people can understand that quite clearly. Yes, this is the real expense of the business. The other way of doing it is to add back all the auto expense and then add a cost for having those things delivered as though the business didn't have a car.
Got it. Okay.
That's the other way to do it,
Yeah.
right? And
Yeah.
I've seen that a lot with more industrial kind of businesses where the owner's got like a $70,000 pickup truck
Hmm.
and it's a luxury vehicle for him to enjoy,
Right.
but he claims he needs it for doing deliveries, but they might do one a week.
Right.
So I'll add back the expense of the truck and then I'll add in the cost of like a delivery service.
Makes sense. Okay.
Yeah. So what did you have totaled up there?
Uh, for ending November 30th, $7,102.
So let's put $7,000. And if you were going to leave in quote unquote legitimate use, would that be like a fifth of that or 1/7, like $1,000?
That is a good question, David. It's hard to say. The other thing I believe that my accountant also told me was that I think I get mileage to and from the shop because I have no office. So I'd have to figure that out, David. I'm not sure
Yeah.
because I use it Monday through Friday. I use it on weekends to do stuff if needed. Um, so that's,
So So here's the hair splitting
Yeah.
that you have to think about when you're talking with your CPA.
Okay.
Is that your CPA is going to be talking to you about the different rules and things as they apply to tax code,
Right.
right? So there are certain rules about what you can and cannot do
Correct.
according to the rules for taxation.
Right.
And there may be some differences between those rules and the perception that a buyer might have
Yeah.
of
Yeah.
what the actual business case need is for the business.
Hmm.
But whatever you do, just make sure you spell it out clearly so that if somebody asks you, you could say, well, this is how I figured it out.
Makes sense.
And
Yep.
they can be free to disagree with you, but
Yep.
at least they understand how you came up with the number. And if they disagree with you, then they're just going to let that influence their offer to you or what have you.
Right. Right. Okay.
Okay.
Yeah.
So what's next?
Uh, Next, it sounds like I may not be able to add this back either based on our conversation of the note payment add back. I also um, am making payments to a loan that I took out to buy the business, a HELOC, and
Mhm.
so I was making monthly payments to the HELOC. But again, it sounds like that won't be an add back, just the interest payments to that
Just the
HELOC.
interest. Yeah.
Yeah. Okay. So that was 9K. So hold that back. Okay. All right. The next is dues and subscriptions,
Okay.
and that's 5423, $5,423.
And none of those is for like any trade publication or anything?
What do you mean when you say trade publication?
Well, if part of the dues and subscriptions relate to your like if you had to be a member of like a local chamber of commerce in that community,
Right. Right.
that might not be an ad back.
It's not. Yeah, I don't have anything like that.
Okay.
Yeah.
All right. What's the next one?
Have donations.
What kind of donations do you make?
The ones that I had to Girl Scouts, to I'll have to go back and check what the other ones were. One might have been like a memorial fund, like a GoFundMe type of donation. Those are the ones that I can remember off the top of my head.
So here's the sort of rule about donations.
Okay.
Some donations are really marketing and advertising. So if the local Girl Scouts in that neighborhood come
Mm-hmm.
to you because they're doing something and they want some kind of donation and you make a donation,
Uh-huh.
it's because you're trying to build goodwill amongst those people and their
Yeah.
families, et cetera, right?
Okay. Yeah.
So that kind of donation, I wouldn't agree with an add back to that, because to me that's the regular community involvement that a business might choose to do, and it's part of the marketing and advertising. If you lived an hour away and your business made a donation to your church congregation, for example,
Mm-hmm.
that would be an ad back. That would be an ad back,
Okay.
because it's like you're just using the business to provide money to your own personal desire to give to that thing, that congregation or what have you. It's
Okay.
not related to enhancing community goodwill for the business,
Okay.
right?
Okay. So
So
I'll. Yep. Go ahead.
so are these mostly all like sort of community based?
Um, no, I would say the Girl Scouts are.
Mhm.
The other ones are not. So
Okay.
I'll have to go back and adjust that
Okay.
accordingly.
So why don't we take a stab at this, like, and just give me a number that you as an estimate.
Let's do 1,000
Okay.
donations add back. So I'm gonna put 1,000. Okay. What else do I have meals and entertainment. $548.
Okay. So what types of what would you be doing to incur those costs? Is it just you taking your wife out, or does it have to do with business related activities?
It's mostly like year-end planning for the next year. Talking about goals, things we're going to do for the business, how we're going to, increase revenues or decrease costs.
Just you and your wife, you mean?
Just me and my wife.
Yeah. Okay. Well, we can add those back.
Okay. $548.
Okay.
Um, The next line item I have is cell phone add back,
Hmm.
2,000.
So tell me about your cell phone. Because in my mind, someone who owns a business needs a cell phone.
Right. Correct. 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 Um, again, yeah, it's just using it for the business, right?
Yeah.
Um,
And I mean, even if, I mean, obviously evenings and weekends, you're going to call your friends on it and all that kind of
yeah.
stuff.
Yeah.
But I only ever agree to cell phone ad backs when it's like a family plan with teenage children on it. Then you're like, okay, well, part of that is not related to the owner's activity in the business.
Right.
But if it's just your plan, then I wouldn't have that back.
Yeah. It's not. It's for myself and my wife.
Okay.
Yeah.
And so maybe we put back half of it then.
Yeah. Yeah. Okay.
Okay.
So that'll be $1,000. Yeah, $1,000. All right. The last one I have is cash payments. Like I'll give 100 bucks to one of the employees that's their 18th birthday, or I'll give them cash for helping me out with a big catering order, things like that. I have that at $1,000.
Yeah, so I would see that as bonus compensation to your employees.
Okay.
So I wouldn't add that back.
Don't add that. Okay. All
No,
right.
because the what I know what you do it. You're kind of like giving them a tip. You're giving them an
Yes.
extra little,
Yes. Yes.
here's $20 for going the
Yes.
extra mile, right?
Yes. Yes.
And then that now part of the sort of conditions of employment that you've created in your business. So if someone else came along and they were doing those types of things too, sure, they don't need to give those sorts of bonuses to the employees. They don't have to do it. But if they didn't, they would be changing sort of the expectations. It's like I see this quite often in not the types of money that you're talking about. I'll see it where there's like year-end bonuses in a sales type organization where people that earn 100 grand are getting $40,000 bonuses, and someone says someone's trying to add back their $40,000 bonus.
Oh wow.
I'm like, well, if you take away the salespeople's bonuses, you'll probably have to find new salespeople soon,
Right.
right?
Right. Right.
And so this isn't to the same degree, but it's such a small amount of money. I wouldn't add it back.
Okay.
Yeah.
All right. Fair enough. Where's cash payments? Okay. I'm gonna take that out. Okay. So okay, that's all that I had for
Okay. Are you working on Excel? Do you have a total, or do we need to add this up?
I do have roughly a total. I had 360 minus the 18 plus the 9, so that's 27, 28, 29. So 360, let's say minus 30. So we're at 330K now.
330K.
Yeah, roughly. Yeah.
Okay. So I can tell you from the hundreds of financial statements I've looked at over the course of time,
Yeah.
that a sandwich shop with an SDE of 330,000 is an exceptional sandwich shop.
Yeah, I've been very fortunate, David.
Yeah.
Yeah.
So congratulations.
Thank you.
I you had mentioned to me before the call what we would be talking about, not, spoiler alert, everybody out
Yeah.
there. But so I did some looking, right?
Yeah.
Because things like a sandwich shop, um, you know, I actually use this as an example of like barriers to entry in business.
Yeah. I think I've heard this.
Because you can get into a little restaurant business with used equipment. Like you can get into it for a fairly low investment. Availability of prime locations and that kind of thing is a different element to this. But
Correct.
Traditionally, because food service is so competitive, these businesses have sold for a relatively low multiple of SDE. But when I took a look in some of my databases, what I found is that businesses like this with this kind of SDE actually push into the high twos, almost to 3x SDE in the data that I found.
Yeah, go ahead. Sorry, David. Go ahead.
No, what were you going to say?
Yeah, so that's one thing that was interesting, David. Like, so when I did some initial research, so like you've heard of this site, Biz by Sell, right?
Yep.
So they do evaluation, type of report, and you're right. So when you look at it, basic for a sandwich shop, you're right. It's according to their data, it's around two times SDE. But the interesting thing was I couldn't find data that would be an apples to apples comparison that showed sales of sandwich shops that are doing 1.3 million and a higher SDE. And so that was the frustrating part. And then when I also spoke with a back of the napkin family friend, um, who was a broker, he said the same thing, was that based on typical sandwich shops, you're looking at a 2.2.
Mhm.
um, but that's what was kind of a little bit frustrating, because I don't feel that that's a apples to apples type of comparison.
Well, I'll tell you what a buyer will be thinking if they look
Yeah,
at this.
yeah,
Is they're going to say, "Wow, what a great sandwich shop," number one, and number two, they're going to ask, "Am I going to be able to carry on this cash flow,
yeah.
or is it something special that Troy's doing? Has he got some
No,
special ingredient in the
right,
sauce or something?"
yeah,
And this is a franchise, which is
right,
actually
right.
helpful to you
Yes,
because you have a certain consistency in your operations and reporting, right?
yeah, correct,
Yeah.
correct.
What is it? What is the franchise situation like? Do you get along well with them?
Very well. Yes,
Yeah.
super supportive. That was one of the reasons before I bought. Talking to many of the franchisees, and that's the one thing that was constant, was that the support is tremendous, and I agree to that.
Do you get good value? Like, do you participate in an advertising fund, and do you see a lot of what your money goes into? Like,
We do. There's a royalty fee, and then there's the marketing fee,
mhm.
and we do see that. We do see, some of the things that they're doing. So for December, we're having a gift card promo. We launched this year in Costco with gift cards as well. So yes, they're doing some good things there.
When you sell a gift card, do you get the money, or does it go into some kind of corporate?
Yes.
And
So
and then they can use the gift cards at any location of the chain, right?
correct, David. Yeah.
Okay.
So they'll take it out of my funds, but if they come back, they'll put it back into my
Yeah.
to my account.
No, the reason why I was asking that is because gift cards can represent deferred revenue. It can be an issue, but in this case, the issue is resolved by the fact that you personally don't have the liability for the cards you've sold. It's your franchisor
That's correct.
holds the liability for all of them. So, all right. So here's the concern. The buyer's going to say, is this going to carry on under my stewardship?
Right.
And what you've got is you've got a track record here, even through the pandemic, of sales being strong. Have things started to open up where you're located?
Yes and no. So we're in, California.
Okay.
So which the masks are still required, right? Coming into the shop. Um, most again, I do have a few tables inside the shop, but mostly everyone will eat. I have a patio too, so I'm fortunate that I have a patio, an outside patio, and most people will eat outside or they'll take it to go.
Okay.
But yeah,
So one of the concerns that a buyer might have is that you are a net beneficiary of the pandemic because the pandemic hit, the lockdowns occurred, your sales actually went up,
hmm,
right?
yeah,
So the worry might be that as things open up more and rules go away,
right,
that your performance might decline. So here's what you might expect is that you could be getting some offers where people are willing to give you the valuation that
yeah,
you want, but they're going to have some kind of caveats or want you to do something like hold a seller finance note, which will be subject to the performance maintaining itself into 22 or 23.
yeah. And David, so some of the things that I can do, some of the data that I can provide on that is, well, I have data from 2018, 2017, 2016, um, from my purchase, and maybe the franchisor would allow me to. I don't know if they would give me data past that, but I have data that shows that, yeah, it's, you know typical revenues are a million, 1.1, 1.2 per year. And
Mhm.
this goes back, here's the sales reports that I have from when I purchased the business to show that this is something that's constant.
Yeah.
There
And
you go.
the other thing is that this business of yours is in a category where there are a lot of potential buyers. A
Yeah,
lot of people could potentially run a sandwich shop, right?
correct. Yeah.
And so I think that in as far as your interest in trying to get the highest price possible,
Hmm.
I think that the right business broker could probably provide a lot of value for your year.
Yeah, David, and that was one of my questions too. I think that I put on there originally that I was trying to figure out, and I forgot to mention. Um, Given the price and things like that, and uh, business broker, I think fees are around 10% or so, and so that seems like a lot of money on a let's say $700,000 price or whatever. I'm not sure where that's going to land. 750. Um,
Well, no, because if we've added up 330,000 of SDE here,
yeah,
if we multiply that by 2.8, or let's just call it 3,
yeah,
like we're close to it's like $1 million.
yeah. Yeah, and that's where um, again, where I'm trying to, and then yeah, if we're close to that, then 10% of that's 100 grand, right?
Yeah.
So that's where I'm trying to figure out, right? That's why I'm having these discussions. You know, what makes sense?
So
Yeah.
are you in a big metro area with millions of people?
Yes.
Okay. So this is probably going to be one of the hardest parts of this is actually creating a list of business brokers who have a track record of selling this kind of business,
Good point. Yeah, I hadn't thought of that. I hadn't thought about.
interviewing them,
Yeah.
interviewing them,
Yeah.
getting their feedback. But you have a plum business for sale.
Okay.
And so in the marketplace, there are business brokers that would really want to have this listing.
That's right.
So you may be in a position to negotiate yourself a different from the standard rate of commission.
Got it. Got it.
Don't be afraid to go down that
Yeah.
line of thinking,
Okay.
you know.
That's
And
important.
now you had said that you had an employee that might be interested.
Yes. Yes.
Can that person come up with 100 or 150 grand of their own money?
Based on an SBA loan type. Is that what you're saying, David?
Yeah, well, they're going to need some amount of down payment if they're going to do
Yeah.
an SBA loan to buy your business.
Yeah. Yeah. Depending on the price, potentially, and so that, and the thing about the SBA, from what I recall, I can't help and note with their down payment. Correct? I can't.
the the there are certain things that can be done, like if you read the rules carefully and you find the right lender.
Yeah.
Like I know there's a scenario that one of my clients took advantage of last year where the seller held a note that was postponed for years,
Okay.
where they didn't get any payments on the principal portion.
Yeah.
And the SBA kind of considered that to be part of the down payment because there was no cash flow requirement from it.
Okay.
So there can be ways to help that buyer. So
Yeah.
here's when you go to a business broker, for example, a big part of their job is finding a buyer.
Right.
So one of the things that you might want to have at your disposal when you're talking with those business brokers
Yeah.
is you might want to negotiate some sort of special deal if that particular person happens to become the buyer.
Right. Right.
And then the broker should have connections within the lending community in that city.
Right.
If the broker sold this kind of business before, they'll know which bankers are interested.
Yeah, that's a good point.
They're going to help facilitate all of this, right?
Mhm.
So if This would happen in real estate all the time, where someone will say, I'm going to list my house for sale, but if I find the buyer, I want a discount on the commission. And the realtor might agree to that. Same kind of thing can be negotiated in the business brokerage.
Right. Right. Yeah, that makes sense.
Yeah.
That makes sense. And when looking for a broker, is it granular as far as, hey, have you sold $1 million sandwich shop, or is it $1 million restaurant, or how do you kind of,
You want to find a broker who's sold a bunch of what I would call more easily accessible businesses from an operational point of view. So they've sold convenience stores, gas stations, sandwich shops, restaurants.
Yeah.
Like these are the businesses that a lot of buyers can adapt their skills and experience to operate.
Right.
Right.
Yeah.
And oftentimes these are the kinds of businesses that people who actually don't have business management experience will get into, because they are perceived, at least, to be the more simpler kinds of businesses to run, especially in a franchise scenario, because the franchisor is probably going to require that buyer to be approved, number one, and number two, to then probably attend and go through the franchisor's training program.
Correct. Yep.
So this is really what opens the door to really any person. Like, I mean, you didn't have restaurant or sandwich shop experience before you got into this, did you?
Right. No, I mean, just high school a little bit, but that's it. Yep.
Yeah.
Yeah.
But I mean, you went through the franchisor's training, and then you learned from their operations, you learned their systems, and you were able to execute.
That's right.
And so there's a lot of people that can do that. The same sort of thing can often be said for corner stores and laundromats and things like that. Yeah. So you want the broker who sells a lot of that kind of stuff.
Makes sense. Thank you.
Yeah.
Yeah, that's great.
And you want to ask them for referrals. You want to talk with the buyers and the sellers.
Right. Yep.
Your franchisor, have you spoken with them yet about your desire to sell?
I have not.
Okay.
I have not. No.
So they could have a whole set of rules for you. You might have to actually formally indicate your intention. They might have a form for you to fill in that says you intend to sell. They're probably, I would talk with them before I sign anything with a broker.
Yeah. Okay. Good point.
Because there are franchise systems out there that I've helped people in, where the franchisor has a sales department of people trying to find new franchisees. Right. But they will sometimes talk with people who want an existing location. And sometimes they will have a program for generating buyer leads.
Right.
Right.
Yeah.
And so you'll want to understand all the details of that before you talk with the broker, because you might, again, say to the broker, like, I'll pay you X amount per commission. Yeah. But if my own franchisor brings us a buyer that buys the business, right, maybe I want a special deal on that or something.
Right. Right. Makes sense.
Yeah.
Yeah. Yeah, that's great. What
haven't we covered yet? What else are you thinking?
Well,
let's talk more about preparation. So you got your Addbacks.
Yeah.
Do you have a relative who is not involved in your day-to-day business that you can trust to keep quiet about this? And in particular, the type of person I'm thinking of is like a mother-in-law.
To keep quiet about?
Well, this is what I want you to do, is I want you to have that person come to your business.
Okay.
To create a list of criticisms.
I see. That's my wife can easily do that.
Okay, your wife can do this? Okay, well, that's a good job then. Yeah. Because what you want is someone to come in who's going to have a critical eye to everything.
Right.
The light switch cover plate that's been missing for 3 months, you keep walking by.
Right.
This new person's going to notice it.
Yeah.
Right. The dent in the counter, or all these little things.
Yeah.
That you just kind of live with, that you've stopped noticing.
Right.
A fresh person that walks into your business for the first time, they may notice some of these things. And you don't want a buyer to become critical of the look and feel of your business. You want to give it the best appearance, both in the numbers and in that experience when somebody walks in there.
Yeah, that's a great idea, David. I had um, family members that own gas stations, and they had come to the shop for the first time, and they pointed out, some of these things. So
Yeah.
that's
So you want to rectify as much of that as you can, which is actually going to be helpful to your business, right? Because a new customer that walks in is probably noticing some of these things too. So that's, you want to keep an eye on that kind of thing. Your records, the franchisor probably has you using a certain kind of point of sale system, right?
they do.
Yeah. Do they mandate the back end financial system that you use, your bookkeeping system?
They don't.
They don't.
Yeah.
Do you have access to any kind of benchmarking information from other stores like yours?
Um, yes. Actually, no. We used to have that when the new franchisor bought the business last December. They took that reporting information away. I talked to other franchisors. I'm sorry, I talked to other franchisees, and so I kind of know, and I have data from last year that shows kind of the comparison of all the shops. And of the shops, I'm number two in sales volume, and and the only reason the one that's number one is they're open longer than I am. So
Okay.
that's the reason why their business is up a couple 100,000 more than me, but it's because they're open longer.
This kind of information is going to be helpful for the information package that you ultimately, or you or the broker ultimately
Yep.
put together on the business.
Okay.
So even if they don't make this kind of reporting regularly available,
Yeah.
you might ask the franchisor for some of those statistics, or even just to be able to say that you're the number two in sales revenue,
All right.
or something of that nature.
Right.
Right. You
Yeah.
also,
I think we'll be able to say that, David, because I remember when I bought the business, the broker had that on their listing. But again, that was a previous franchisor, so you're right. I do need to check to make sure that that's okay to say. I hadn't thought about that.
do you have to report like your food costs to the franchisor?
Yes, we do.
Okay.
We do. Yep, monthly we do a report that talks about our fixed costs, variable costs, payroll, COGS, all those things. Yeah, every
Okay.
month.
That is equally important. So you want to be able to say to a buyer
Uh-huh.
where you are in comparison with the other stores. So if your cost of food, for example, is 21% and the network average is 22,
Mm.
that's important.
Yeah, that might be tough, David. I haven't seen anything like that.
Yeah, but they're
Even
asking you for it because they're looking at it.
right,
So again, it may not be part of the regular information they're giving to you,
right.
but you might be able to ask them and say, hey, I submit my cost of goods sold and all that other stuff. Can you
Yeah,
tell me what the averages are so I can show if my store is better or worse performing?
yeah, that's a
They,
great point. Yeah,
they
no,
might agree to it,
yeah, you're right. Okay.
because we're talking in your business about a percentage point being worth $13,000,
Oh wow, wow.
right?
How
So
did
so
how did you come up with that figure?
well, you said your revenues are going to be 1.355 million for the year.
Correct.
So 1% is
I see.
$13,550.
I see. That makes sense. Yeah.
Right. And
Right.
then and in a trade like a sandwich shop,
Right.
this is where you make her lose money. Like if you're a poorly run operation where employees are given their friends sandwiches for free and stuff like that,
Yeah.
where it shows up is the cost of goods sold creeps up.
Right.
Right.
Yeah.
And you know, like a three being off by 3%, if we do the math, we're talking 40 grand.
Right. I
Right.
hadn't looked at it that way, David, ever.
So this is where the problems usually happen. Now, somebody who is a veteran in the restaurant business, they, you know, might look at performance numbers and they look for a problem. They're like, oh, if the performance of this business isn't as good as it can be, I can juice this up and I can make it run better.
Yeah.
But that's probably not going to be the buyer.
Right.
The buyer for your business is going to be someone who may be new to business altogether or new to the sandwich shop trade, right?
Correct. Yep.
They're
Just
looking for something that earns good money, that they can manage, and that they're going to have the help and support from someone like a franchisor forever, right? It's
yep.
not it's not just about you doing a training and transition. If they buy this business from you, they're now going to be together with the franchisor ongoing. So it's going to be attractive to sort of a more newbie kind of business buyer.
Yeah.
They're going to be less inclined to think that they're going to come in and make changes to improve things.
Right.
They're probably going to put more value on the fact that it's a finely running machine as it is.
Correct. That makes sense.
And so any of these sort of bits of data that can demonstrate that you've got a really well run operation, that it's going to make it attractive.
That's great. That's great feedback. Okay.
Yeah. The other potential here is that another shop owner in this network might want to be your buyer.
Yeah. Yeah. That's
Is there anyone else close enough that you think they might feel comfortable managing this one?
the ones that I talked to, they're also trying to downsize, right? They're also, um, he had 3 shops, now he's down to 2, maybe down to 1. In my area, there's smaller shops that are also for sale. There's 3 that I can think of. So not sure if there's a.
So you can't think right off the top of your head of one person who might be like interested in growing by buying yours. That's fine.
Right.
In these scenarios, oftentimes there are other franchisees that are on a growth,
Right.
plan. So,
Correct.
all right,
Right. Correct.
just an idea.
Yeah. No. I mean, the franchisor is looking to expand. So maybe that's a question that I can ask the franchisor. Is that given your guys' past background of owning, another large national sandwich shop chain franchise, you may know some other buyers that are looking to buy this type and size of business. If you have any recommendations.
Let's talk about your plan though with the money. So you sell this business and you go buy another one.
Yeah.
Have you been looking at the market of what's available for sale?
I have. I go to some of the business listing sites like BizBuySell, BizBen, some of the e-commerce sites. But again, just kind of looking and seeing what's out there. So yeah, it's a great time right now, to buy a business.
What the general sort of commentary and feedback that I hear most often, and it may just be the people I'm talking to, is that there's a lot of competition for businesses that get listed. Average multipliers are being pushed up.
Mm-hmm.
There's a lot of assumptions being made about the baby boomer retirement geared around their age. And this is the thing that I've always had the biggest problem with. Okay. Because I have honestly not known a lot of entrepreneurs who want to retire as soon as they turn 65. I know a lot of civil servants who do, right?
Okay, yeah.
People that work in factories and stuff like that, as soon as they can get their full package, they're like, yeah, I want out.
Right.
But in my experience, business owners either build these wonderfully huge and successful businesses and they cash out like when they're 50 kind of thing. Okay. And become investors and venture capitalists or whatever, right. Or they tend to stay on longer, especially if they are organized enough where they can have supervisors and managers, and maybe they can do a lot of stuff for the business online and they can do that from Florida or something like that. Right.
Yeah.
And so I have I've known quite a few people who've done really well in exiting when they were in their 40s with
Okay.
the assumption that they were going to parlay that money into an acquisition,
Yeah.
and then have been frustrated by the fact that they've sometimes spent 2 years looking for that acquisition.
Wow.
So this is why I was asking you about your exploration of what's for sale,
Yeah.
because I honestly think that this type of business that you have
Yeah.
with the right broker
Right.
could probably be sold fairly quickly.
Okay.
So I'm wondering if it doesn't make sense for you to actually start to get into the market as a buyer, to be looking at different things. And
Yeah.
there's other possibilities. Like, you could definitely, for example, parlay the cash flow of this business into being able to borrow, or make a deal for getting into your next business without necessarily selling this one.
Right. 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 Yeah. Yeah. I hadn't investigated that type of avenue. I've listened to some of your podcasts and things like that that say that's something worth doing, and I haven't even sat down with my banker to say, you know how do loans work for you with you guys, and how, if I was interested in buying another one of these sandwich shops, a smaller one for 300K, 400K, how would that loan look like? But I haven't done any of that.
Well, I'll tell you that with the kind of cash flow you're talking about,
Yeah.
if when you want to grow from one sandwich shop to two,
Yeah.
the bank is likely going to look at it as a business expansion, and they're going to look at the combined entity.
Right.
Like,
Okay.
you could actually have a banker tell you they'll give you all the money for an acquisition.
Wow.
And so I mean, understanding your goals and the outcomes you're after in
Right.
your next thing, I think, is an
Right.
important thing for you to explore.
Correct,
Because,
David. Yep.
you
Yep.
know, one thing that you just mentioned to me, there's a bunch of these same restaurants for sale.
Yeah. There's a few. I mean, it's not. I wouldn't. The off the top of my head, there's three that I know of
Mhm.
that are in sale for sale here.
Yeah.
Area.
So would acquiring more of the same sandwich shop, would that satisfy what's driving you here? Like,
I don't think. No, I don't think so. I don't think so, David. I want to do something else, right? I want to buy a
mhm.
bigger business. I want to the next business potential of 500K
Okay.
STE to a million, right? STE. That's kind of what I'm looking for, and the potential to put to double, triple that type of business. That's
Yep.
kind of what. Yeah, that's kind of what I'm looking.
Okay. So something more leverageable, because I mean, it would be really hard for you to double the sales of this business.
Right. Exactly.
Yeah.
Exactly. Yeah. Not. I mean, in the franchise, 3, 4, 5% a year is pretty good. So for me to get 10%, I'm pretty happy. So yeah, that's very difficult to do unless you, of course, as you mentioned, buy another one of these locations, and I, that's something that I'm not interested in at this time.
So I would say that while you're doing this, going along these steps of interviewing business brokers, and
Yeah.
sort of feeling your way through this process and talking to the franchisor,
Yeah.
really sitting down and creating a list of characteristics and criteria for the type of business you want to buy,
Correct, David. Yep. That,
dealing with questions like talking with your wife about whether or not relocation is something that you're open to,
yeah.
those kinds of things,
Yep.
because all of that is going to play a big role in what that next opportunity is going to look like.
Yeah.
If you need to stay where you're living, for example, it's going to look very different than, like, if you're in a big metro area. um, there are certain business types that get forced out of those areas because of
Right.
costs, right?
Right.
But
Right.
if you're free to go anywhere, then it actually opens up a lot more opportunities.
Yeah. Yeah. No, that's a great point, David. I mean, I know, in initial discussions, have a few parameters and things like that. Which one we talked about is, the potential of a STE of 500K or higher.
Hmm.
The other thing is, a business that may be only open Monday through Friday, right? The sandwich shop that I have now is 7 days a week.
Yeah.
Um, and then, I work with teenage kids a lot, and, that can be a challenge. So I do have some of those criteria right now outlines. But yeah, that's absolutely a great point.
What's the biggest challenge with teenagers?
It's the work ethic, I guess, is what I would say is, from based on, here I grew up in the 70s, and I'm 50 years old. Uh, our work ethic was pretty strong. I mean, you went to work, you did your work, you didn't, you weren't on your phone, an 8-hour day was not an issue. Things like that, where nowadays it's, for getting someone to work a 4 or 5 hour shift, um, compared to an 8-hour shift. I don't I very rarely do 8-hour shifts for people unless I know that they can handle it. But those are some of the challenges, is the work ethic, and um, you know some of the challenges that you get with today's generation. There's, but there's good people as well. So you just have to find the right mix, the right employees.
Yeah. Yeah. Well, I mean, I've heard similar concerns from other
Yeah,
people before,
yeah,
Troy, this has been awesome. Anything else that you wanted
yeah,
to cover
yeah,
before we
David.
wrap up?
Yeah, thank you, David. I think the one thing that I'm still, we talked a little bit about this, was the valuation part of it, in how do I justify, a 2.8 to 3 if I can't really find the data that says, how do I, that's where I'm,
Well, so a couple of things
yeah,
is that when you find a qualified business broker, they're going to have
uh,
access to private transaction databases you have to pay to subscribe to, which is what I have, and this is what I've looked in, and I've found them. So,
okay,
so it may not be available on the websites you've looked on, but
right,
that doesn't mean it isn't there, right?
okay,
And so that would cover that part of it. At
that,
the end of the day,
yeah,
it comes down to cash flow.
okay,
So is there enough cash flow there to service a debt that someone's going to take on to buy a business of this size?
right,
And um, are you going to find someone who is going to want to do that deal? I think your type of business is going to have the widest possible audience of people willing to look at your deal, which means you're going to
yeah,
have a greater chance of finding the person who wants to do the deal.
yeah, okay. Yeah,
Yeah.
no, that makes sense. The other shop owners that their businesses for sale, they're getting a lot of attention.
Yeah.
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 Okay.
It's, there's a reason why the modern incarnation of franchising has been defined by people like McDonald's,
Right.
right?
Right.
A lot of people eat out. A lot of people are looking for a business opportunity, and a lot of people need help, to make sure it's executed properly. And it's worked really well in that whole food service area.
Yeah.
Yeah.
That's great. All right, David. Well, thank you so much. This has been super valuable to me, and I appreciate all your help and your guidance.
No problem, Troy. Best of luck, and let me know how it turns out. I'd be curious to know what ends up happening.
I will, absolutely, no problem.
All right. Have a great day and happy holidays.
You too. Take care.
Bye.